Okay, so once you have imported all your data, right, now it's time to take a look at, okay, sorry about that. Now it's time to take a look at your valuation table, right? In your valuation table, the most important thing you want to look for, right, are your multiples. Every business is valued based on the multiple, right? It's either a price to sales multiple, an enterprise value to the EBITDA multiple, which is really just a measure of the value of the company versus how much earnings before interest, tax, and depreciation, right? EBITDA is almost a measure of profit, right? Just think about it as, profit before your interest and taxes, right? And this is a normal way. It's a common way that investors and analysts value businesses, right? Then you got your price to earnings multiple, which is typically for mature companies, companies that are not growing as fast. You'll typically see that the price to earnings multiple will be the same or close to the same for every year because that's just the average multiple that the business trades at, right? So that's something you want to take into account. And then you have your discounted cash flow um, method here, right? Which is all it is a measure of the terminal growth, right? The weighted average cost of capital, and that will give you your firm value, right? It's based on your cash flows, right? Your cash flow from operations, right? So let's actually just jump into this one, right? So the model gave me a price to sales multiple of 3.9 for 2018 and 5.9 for 2019, right? So we can see that this expanded a little bit. Upwork's only been on the market for about a full year, right? 2019, and it's already trading at 6 times sales, right? So you look at it here, you can see that the revenue in 2019 was 300 million, and the business traded at 1.7 billion, right? So that's how you calculate your price to sales, right? Now, typically with the price to sales multiple, the average for a growth company will be somewhere closer to 10 times sales multiple, right? 5 times sales is typically too cheap. 10 times sales is about average, and 15 times sales is on the expensive side, right? So just look for most growth companies to trade somewhere at around 10 times sales, right? Just kind of depending on their brand and their market dominance, if they have any moat, their industry, is it growing? So that's the kind of thing you want to consider when you put a certain multiple on a stock, right? So just from what I know about Upwork, right there, they're in the space of providing a platform for freelancers, right? So this is the type of business that, right? This is an industry that clearly, we know this is going to grow, right? Moving towards an economy where there will be a lot more freelancers, right, for tech and all these other types of industries, right? So this is a company I think that can get an average multiple of close to 10 times sales, right? And we can also see that Upwork's been growing pretty well over the past few years, right? 25% growth in 2018, 19% growth in 2019, right? So what we have to do is actually enter in what we think their sales growth will be for the coming years, right? All you need to do when you're valuing a company, right? Three main things you need to figure out is what their sales are going to be, right? Then you figure out what the multiple should be, and then you figure out their shares outstanding, right? So let's jump into that, right? We'll actually start from the shares outstanding. The reason I'm saying that is because I want you guys to see, how important this part is, right? So we've seen that Upwork's shares outstanding actually doubled from 2018 to 2019, right? Which kind of makes sense. They were going through an initial listing and all this kind of stuff, so they probably raised some capital, right? But typically, companies won't just double their share count every year, right? That's not a normal, it's not something normal to do in the course of business, right? And growth companies will always have their shares outstanding. It'll always grow by a lot, but you kind of want to get a reasonable estimate, right? So just looking at the previous year's dilution, right, we could say that, okay, we don't expect their share count to double, right? But maybe they will, maybe they'll add about another 20% more shares, right, to their float, right, which is a pretty reasonable estimate, right? So we're going to just do their previous year shares outstanding, which is 109 million, and we're going to multiply that times 1.2, right? 20% growth, right? That gives us 131 million shares, right? Which I think maybe, that might even be a little too high, right? So what you want to do sometimes is, what you can actually do is you can actually go ahead and look at the company's previous Q1 report, right? Or their most recent quarterly report, right? So we'll actually go and look for Upwork's quarterly report, right? And what you want to look for is you just want to look for their shares outstanding, right? Because you want to see their most recent shares outstanding number, right? So here's their Q1 report. Go ahead and type in shares. And there we go, right? Weighted average shares outstanding in the range of 116 to 118, right? So that 131 number we just did was actually a bit too high, right? And what is this? This is guidance, right? Second quarter. So this is guidance for their second quarter numbers, right? So they think their second quarter sales will be this, right? And their shares outstanding will be this, right? So we'll actually just go ahead and use that number for the full year 2020, right? Because we're looking at the full year 2020, full year 2021, right? And they're saying about 117 million shares, right in between, right? So we'll leave that at 117, right? Now the second part is the multiple, right? Now we could say that Upwork should trade at 5.9 times sales again, right? Since it traded at that in 2019, and that would be fair. That would be fair to say they should trade at least 5.9 times sales, right? Because that's where they traded in 2019. Or if you want to, take the fact that the company's multiple expanded a bit from 2018 to 2019, you could take that into account as well, and you could say that maybe their multiple will expand again in 2020, right? Depending on the type of growth they're expecting, right? So we'll just leave this at 5.9 for now, and then we'll go on to our sales growth, right? Everything in gray here will calculate based on the sales number, the sales growth number that you put in, right? So I could actually just check what Upwork's Q1 sales were, right? Which if I go back to that report, so this is their Q1 2020 report, right? Revenue grew 20%. Okay, so their sales in the Q1 2020, 83 million, right? And then they had the guidance down here, right? For sales in the second quarter, right? So they're saying Upwork is providing guidance for the second quarter, and they expect sales to be somewhere in the range of 79 to 81 million, right? So we know they did 83 million, right? We know they did 83 million in the first quarter, and they expect to do another 80 million in the second quarter. So for the first half of the year, they expect to do 163 million, right? And when you multiply that times 2, you get something like $326 million in sales, right? That's what they're expecting. That's a good estimate for sales for 2020, right? 326 million. So it's 10%, so maybe a little lower. Let's try 9%, and there you go, right? 326, 27 million in sales. So Upwork will probably grow about 9% this year, right? Which is not as good as previous years, right? And that kind of thing will actually affect the stock's margin, and not their margin, I'm sorry, their multiple, right? So they grew 9%. They're going to grow 9% in 2020. So maybe their multiple won't expand as much, right? Their sales growth is not as great, so maybe their multiple will stay at 5.9, right? But then going into 2021, right? We always want to try to estimate the sales 1 year forward. So going into 2021, we can maybe say that, um, maybe their sales will pick back up momentum. Everything that happened in 2020 slowed a lot of business down. So going into 2021, maybe their sales growth will tick back up above 9%. So we could say something like 15%, right? Since that's in between 9% and this 19%, right? And kind of based on everything going on with the company as well, you kind of want to, do your due diligence, make sure that you could get a good estimate of sales for 2021, right? Because this number could actually be negative 15%, right? If you don't really know, right? And that this will screw up your valuation a lot. So you want to have a good estimate, right, or a reasonable estimate of sales for 2021, which I think could be somewhere in the $376 million range, right? And like I said, you have to do a little digging. Maybe you got to read their report and see what they're doing, what the company's up to, and what kind of sales they might expect for next year, right? So all of these line items like gross profit, EBITDA, CFO, all of this stuff is calculated here based on the profitability um, ratios, right, or the profitability percentages. So we have a gross profit margin, right, of 68, and then 71. So the average is 69, right? And that's the number that we use to calculate the gross profit, right, for 2020 and for 2021. We use that 69% number, right? And same thing and so on, right, for every year. Right? And let's actually just go ahead and put in a standard growth number for the remainder of these years, right? So let's just say the company will grow at about 9% annually going forward, right? Now, looking at this, right, we can now focus on our multiple, right? So for 2020, our multiple, we said we would leave it at 5.9, right? Same multiple as it was in 2019. So we're not changing that at all, right? And maybe in 2021, right, when the company starts to pick back up in growth a bit, right, maybe they'll get a multiple expansion somewhere in the range of 7.5, right? Remember what we said. On average, growth companies will trade at about 10 times sales, right? A good growth company will trade at 10 times sales. An excellent growth company will trade at 12 or 15 times sales, right? A normal growth company or a basic growth company will trade somewhere at 7 times sales, right? Which is what we think Upwork could be. And in 2022, we'll go ahead and say we'll give them a slight expansion in the multiple. and then another slight expansion in the multiple, right? And the reason you do this is because, like I said, right, 10 times sales is really that sweet spot, right? No one wants to pay more than 10 times sales for a basic growth company, right? But a company like Upwork that's growing, pretty sustainably, right? It's not the fastest growing company, but it's sustainable because of their industry, right? You will get a decent price of sales on that of about anywhere in the range of 7 all the way up to 10, right? Maybe not 10, but 7.5 to 9 times sales is a decent estimate, right? Now, now that we got our multiples all the way across, we got our sales growth, right? And remember, this is just a conservative estimate. If we just assumed that Upwork would grow at 9% for the following years, with the exception of 2021, right? Because this is the year when they would have a strong bounce back, right? Um, if we kind of just assume these sales growth numbers, right? Put a decent multiple on the company, right, for each year. And then we also estimated our shares outstanding, right? So they told us the shares outstanding would be 117 for 2020, right? We got that number. Now we can go ahead and say, let's do a 10% growth in the shares outstanding. If you wanted to be more conservative, you could even say a 15%, but we'll do 10% growth in shares outstanding, right? So that, right? So same thing, 10% growth in shares outstanding for this year and 10% growth this year, right? So we got our shares outstanding estimate, right? And you got to also consider the fact that companies will tell you if anything will happen that will drastically change their shares outstanding, right? That's it's a big deal, and companies will literally will let you know if any kind of corporate action will change those numbers. So you just want to make sure you're paying attention to that kind of stuff. And I'm going to go ahead and just kind of clear this stuff so we can see everything clearly. We're not even using those methods, right? We're not using these methods because they don't apply to this company, right? And there you have it, right? So you got your estimate of your shares outstanding, right? 1 year forward. Got your estimate of shares outstanding. You got your estimate of the multiple, right? And you got your estimate of, most importantly, sales, right? Once you've got all that figured, what you want to do as well is you want to put in a volatility number, right? So you notice all of these numbers are the same here, right? This is actually our estimate of the stock prices going forward, 2020, 2021, 2022, right? These are our estimates. The reason they're the same is because we got to enter a volatility number, right? Because we want to know an average stock price, a low stock price, and a high-end stock price, right? So if you just kind of look at past data, right? So 2018 and 2019 for Upwork, you can see that the stock traded at a low of about $10 and a high of $23, right? That's pretty volatile, right? I mean, that's about 120 something percent volatility, right? There's a 120% change, right? So we won't put that much volatility in the model. We'll do something like, let's say, 50%, right? So using this 50% number, we can see that for 2021, right, the stock could trade as low as $10 per share, right, and as high as $32 per share. So, and an average of 21, right? So this is kind of what you want to use to, you know, keep a track of the range you think the stock can trade in, right? And based on these numbers, we have our chart here that populates for you, and this is what you want to focus on, right? This is why you did the model. Typically, I'll send this to myself in an email after I've went through all my numbers and make sure these estimates are all reasonable. And I did my research to make sure that the multiples are good and the sales growth is accurate and all this kind of stuff. This is when you take this table, and this is all you need, right? Not the table, this graph. This is all you'll need. So now I know, right, that Upwork going into next year can trade as high as $32.93, right, for 2021. High end, $33. On the low end, $10, and on average about $21 or $22, right? So this is my valuation of Upwork, right? And based on the stock price today of, I believe Upwork stock price today is about $16. So this kind of lets you see, a good estimate of returns as well, right? Possible returns, right? So again, most important thing to focus on, the three pillars is your revenue, your multiple, and your shares outstanding. If you can estimate those things, you can estimate the stock price, all right? And here we have just some key ratios. This really won't help you with the value, but this is a good snapshot of the company's financial health, right? So we can see that debt to asset is really low, which is a good thing, right? See their cash ratio, current ratio, their margins, right? This is a super important cash flow margin, right? So they haven't really been making, a lot of cash flow from operations, but they'll get there, right? You can see that it is improving, right? Slightly, but it's improving, right? Their asset turnover, right? So this is the model, right? And you always want to just make sure that the three pillars are as accurate as you can get them, right? And once you've got that part figured out, you figure out the stock price, right? And you just want to make sure you're looking at the previous year's multiples. This is really important, right? If Upwork was trading at 10 times sales for 2018 and 2019, and that number didn't change, then I probably wouldn't change it here. I'd probably keep that 10 times sales, right? So it's really important to look at the previous year's multiples, right, to give you a good estimate of what the multiples could be going forward, right? As well as looking at the previous year's volatility, right? We know that Upwork traded at a high of $23, so it's not crazy to think the stock could get back to that level, especially with more sales, right? So that's the kind of thing you want to look at, all right? And